Alrighty. We got 12 minutes. 12 minutes. Here's market open, the pullback from earlier. Big buy opportunity on a lot of charts. Not so much on the averages, but on a lot of charts. Next opportunity was on the lunge pullback into support on just about every single ticker out there, especially ones we looked at, whether they had a trend line support or horizontal. Now we're going bid into close. Why? Because the trend into close was leading towards the bid side. That volume that comes in is going to follow whatever the equation is. Usually it's the demand side. And we know that there's money that has been outflowing, hasn't gone anywhere, and needs to find a new home. It's been going to the derivative side. It's going to cause a squeeze going into the weekend. We are pulled back into support right now. We're pulled back into support on the S&P. We're about to get back into the trend. Small caps Russell was inside it already. Tech is quite a bit of ways, and this is what has rotated the most. Money coming out of tech to go into value. Money coming out of treasuries to go into value. Everyone's betting on inflation. Energy, banks, travel, REITs, anything that's been beat to shit. We've been trading it for a while, and it's been going up for a while, but that was a very small amount. Only the start. Only the start. Only the start. We'll see what close brings. We get 10 minutes. We've put quite some points on from the low. Again, if you took this trade, you're doing pretty good. You're doing pretty good, and you're doing well enough to be able to push into the weekend. We were just talking a little earlier. I didn't have it on the recording, but talking a little earlier about charts, what can be entered, what should be pushed. We're pushing just about everything, taking off some of the more risky trades that where like something like FSR. It's just I'm only day trading this chart basically. It's hard to keep pushing this when you can just re-enter it come next week. Come Monday, I'll re-enter it. If it gaps up 20%, I guess I'll be crying in the money that I made on it, right? Fuck me, right? Oh well. Isn't that the worst feeling, guys? Don't you hate that when some guy on Twitter makes fun of you for taking profit at 500% instead of 600%? Oof. Yikes. So you guys know the drill. Realize your gains where you can. There are some other charts. Again, we're pushing travel all over the weekend. There are some charts out there that are a little iffy. We're still trying to diagnose semiconductors. Now, AMKR is one of the exceptions where it's a clear push. This is very different from the others, though. Very different from the others. The other questions are NVIDIA, how do you push this? You bouncing off support. If you bought it at support and you didn't know how long you were going to push it, now you're asking the question of, do I take profit now or do I push it over the weekend? These are the questions that we're looking to answer in the last few minutes. Same thing with solar, and a lot of the clean energy that we tie into the semi sector being sort of a tier under value, but a part of it. How do we feel about that, right? Now, you get like XLNX here is on support. These kind of trades, it's been super bearish. There's risk involved, so you do have to price some more risk in there. AMD's shit. What TSM? TSM here, if you get in on top of this level, it's possible. It's possible, but again, I would be waiting on a lot of these charts. Retail stores, depending on, again, it was all pullback buys today. You had to buy on pullbacks or you bought yesterday. So here's the pullback today, coming into about, it's right during the open. You had to get some of that pullback or yesterday again on some of the charts that sets up today. Charts like F, Ford. It's possible, but a lot of them that are consolidating are waits. You wait. We're not trading tech. The only thing you can say about tech is that money does want to go there because it's liquid, but it can't be a trade into like a long-term trade. You need to be trading those short-term so that you can take advantage of the move that happens right now, because everyone's rotating out of tech for the value idea. That's not to say you can't get a retracement from the sell event, But again, that's a short-term thing, so you can't just go say, well, I'm going to put a long-term trade on and make 2%. No, you need to go put a short-term trade on, risk a little bit more to gain a significant more on that, or else it's not worth it, right? Dish, I was talking about charts that have these levels of support all around them, levels of supply everywhere. These are possible coming into close here. 7 minutes. T-Dog, charts like this, again, healthcare we consider a part of value. Charts like this, though, are the kind of healthcare charts that this is a level of volatility that is very hard to understand and to go buy down here. You have it's a very small chance to whip. These charts trend, and so they need to create a new trend, right? It needs to create a trend. And that doesn't say you can't make these trades. Healthcare is good, but you want to find the right places to be. There's a lot of bio ideas out there for short-term risk trades that you can push just over the weekend and then set up new core long positions come next week if you haven't already done so. I think a lot of us have already set up, why do I keep typing this wrong? ANTM, okay. A lot of us already set up long positions. So, you know, it does, you have to remember what has come before you and why the prices are the way they are now on some of your charts that you're trying to trade. Absolutely. You know, you're trying to now trade Unum here. We've already entered long positions quite a while ago, right? Quite a while ago. And so you need to remember who's behind you and how many more buyers do you have. Short terms have a hard time in these moments. You want to be buying pullbacks, and this is a pullback buy opportunity, absolutely, in terms of this trend here. Your timing, though, needs to be, you need to time this based on how you're going to trade it. Because if this is going to take a week to get going again, and you're trying to do a short-term trade and you're going to make no money on it, well, then it doesn't really make sense to hold something for a week if you're just going to sell it anyway at break even. So you know yourself better. If you're trading something into the weekend, it needs to have the potential to put points on by Monday. Otherwise, it's not worth the risk or your time. Just fucking go back to doing whatever you're doing. If you're putting on trades for the weekend, they need to be worth something, unless it's just another long position and you're going to push it over a certain amount of time. Because if you're not willing to hold it through sideways movement, whatever it's going to be that shows itself next week, more rotation, and you're not willing to build a real true position, then there's no point of taking that trade. You don't need to know exactly what the price is going to do. You just need to know exactly how you would react to certain situations. So again, when we talk about the level of volatility we're in right now, we're buying pullbacks. We are putting positions on that are going to fucking skyrocket if the market moves in a very marginal amount. Options of 100% if it moves. Otherwise, it's not worth buying right now. There is not a reason to be buying that. There is zero reason to be buying this here if you're not going to get a gain that is significant because you're putting money on the line for nothing at that point. You're just putting risk on for no reason that you're not even going to make money on. So you have to have something that offers potential. So trading the average is not something that offers potential. Does that mean it's not going to go up? No, the average will likely go. That's what we always say. Yeah, in a month it'll be up. You can say that at any point. That's that's the mystery that we forget about. Z talked about Z's getting pushed over the weekend. DraftKings Penn are pushes over the weekend. Again, these are pullback buys. There's really nothing to these trades other than following our rules. If you miss these trades, then it's very hard to go put these trades on right now because you're going to be looking at your P&L into the last second here and you're going to go, well, I don't know. You're not going to make money in the last 2 minutes, guys. You put a trade on right now, you're probably going to be red going into the weekend. You're going to be red even if price goes up. You're going to be red going into the weekend if you buy right now. If you bought it pullback, you just covered enough points here to cover the risk over the weekend so that if it does pull back, you can break even. That's the difference. Very small difference, but a very big one in terms of the way you trade, right? Apps was a must pullback from earlier. This is a must push as well. You can't take profit on something like that. It's gonna be a lot of fun, guys. In terms of semis, we will get a little frisky, I guess. No AMDs or NVIDIAs, I don't think. We'll go with UMC and TSM. I think here. And AMKR. ENPH. Just a couple. Solar, it's possible, but again, are you gonna miss anything? Unlikely. Unlikely miss. It's a trend kind of chart. You could buy it at open. In terms of all these travel charts and everything else, again, if you gotta be buying it on a pullback. If you know you're gonna buy something after it goes up 2.5%, 3%, then just buy it when it was already fucking down and turned. That's You're talking about like 30%. That's a big difference for just about everyone here. So I mean, again, if you miss these charts from the pullback and now you're trying to buy right now, you're gonna have a real fucking hard time come Monday if this stays break even, because those contracts can be worth jack shit if you buy it right there and it breaks even Monday. People are not putting trades on right now for it to break even. No one's putting any trade on to break even right now. That's the issue. So you have to buy on that part where everyone else is scared and there's fear. You don't have to always buy then, but you can't then buy later and then feel good about it. That's for sure. 30 seconds. Let's see what we can do here. Upwork was the other chart. I like that from the support again. You could have bought it on support here. You do have support underneath you going further. I don't think there's anything else we need to talk about. Let's see what we close with. 15 seconds. Excellent X is the other semi, but it's too tied towards AMD. Chegg was the other chart. It's underneath support though. Again, no tech. Viacom and Discovery are the trend charts. Those were the only other two, but that was it. Let's see what we get after hours on these charts. Let's see. Which one? I'm curious at like something like PayPal. Do we have any numbers? No. Any numbers? Nothing. Okay. Let's talk about the day. Or let's talk about the whole week, right? Let's talk about the whole week. So, coming from last week we continued the consolidation, but going into the weekend, we put some points on from Thursday, Friday. Market was signaling all-time high dance. Instead, we got rejection, and the yields started. Yields started climbing coming into the week, right? So yields started going, treasuries started getting sold, turning into a lot of market moves, right? And so again, we started it here. Yes, we saw it yesterday. The real brunt of it, like 5-year going up like 35%, which is just insane, right? It's just, those of you that don't really understand it, it is an insane amount. And so a little bit of a temper tantrum from the bond side. And so from coming into the week, what we understood, we trade our levels. This pullback here, we did not buy everything. This was not like, let's hit the buy all button. We did pick up positions through the value idea still. And so during this move, if you remember, we were making a significant amount on travel. We were making a significant amount on energy, on banks. So the whole value idea was paying through the market pullback here. That it started at the beginning of the week here. And we talked about that as that happened, we were actually getting a lot of points because of the volatility. We swung these up to the trend lines up here. And so in a lot of our charts coincided with this idea, right? Coincided with the transition on the trend line. Almost all the charts were there. There's some charts that were in the middle of nowhere, but we traded as an entire sector, the idea of convergence. And so what we were doing is we took profit, bought on pullbacks. A lot of these charts are getting pushed into the weekend because they have not rejected. They've continued pushing. Again, depending on where you enter, it's either easy to manage the trade or it's very difficult, and you probably didn't hold into it. You tried to buy up here, you're not in that trade anymore most likely, and you probably weren't able to re-enter. Things like, again, just like some other travel charts, if you weren't in this move here, took profit and bought on the pullback, and you entered somewhere over here, or you entered somewhere in here, it's very difficult now to manage that trade if you're entering at such a high point because you missed it before. You have to buy on pullbacks. What did this set up here? It's another pullback. It's not difficult to manage the trade here. There's risk and fear involved, but that's why you're getting a good price. And again, on the options, it's the speculation of price moving that's causing price to move in the first place. So if speculation is causing price to move towards the upside, then speculation is also moving price to the downside. And you know how quickly people change their mind. But the thing that we also know is that money was outflowing from treasuries to come into the value idea. So when you see a chart like this, look at this is the beginning of the week here. This chart here continued to trend. Yes, it started to consolidate here at the end of the week and pull back. It can pull back because it's been trending. Something like banks. To start the week, it continued. This is where the market pulled back that first time. These continued to trend. And again, you look at those travel charts. You look at a lot of these charts, and so during that beginning of the week, we just continued to do what we did. We had to react yesterday based on market influencing a lot of our charts, right? The market influenced a lot of charts. Something like apps here. How do we know to come buy here today? Again, we have to use the market's influence to understand that, okay, this was actually turning here, but it's the market that influenced this chart. There's a chart like TRIP. This candle here is the market candle. If this market event didn't happen, this candle's actually up here. This candle just starts up here. So this is a buy opportunity on someone else's mistake. Or maybe not, mistake is not the good word to use, but on the market's understanding of what's going on. The market's just reacting due to a rotation that's happening. And markets hate uncertainty. So when everyone is selling treasuries, markets don't like that. That's something different that's happening. That's something that wasn't planned before, because price plans everything. Price is supposed to be planning things. When prices on the yield, when the yields change by 35% on a 5-year, then that means somebody's making a different decision than what was planned. So that's uncertainty and not going according to plan. So it takes a moment. To be able to digest that. The thing is that those institutions that are doing that, they know what they're going to do next. It's not like some of you that you don't know what you're going to do every day because you're trading just back and forth every day. They have a plan. They've got a long-term plan, right? And we know what their plan is. Their plan is you can't hide the plan. It's almost impossible to hide it because we know what the numbers mean. If yields are going up, it's because everyone has an expectation that inflation's going up, this reinflationary trade. And I've said reinflation so many times. And what that means is that the economy is getting going. Well, what part of the market tracks the economy? The value tickers, those small caps. So we use the small caps, even though this has some growth in here. All of this was, again, the value trade, retracing. Now, it's already been doing well, but the idea is that now we're getting the actual result of this. We're getting the result of the speculation that it was going to happen. Now it happened, right? Now it happened. It's just like the market speculating that stimulus is going to happen. And as soon as it happens, well, we've already priced it in. The market's not now going to start to go bid. The market was already bid because there was going to be stimulus already, right? The yields are the result. The yields are the result of the speculation, what they were speculating for. When yields went to 1% over here somewhere, and I went, holy shit, we're doing it, that's what this is. We were doing that, right? And so it's important to understand that that was the event, and so that's a rotation. That's a rotation, and now we start again through this idea because now it's confirmation. We always look for confirmation of an idea. Here we are speculating. Okay, it happens. Everyone's realizing, okay, we are going to get hot in the economy. Everything's coming back. So, it's really easy to look at this and say, well, wow, the markets aren't really tied to the economy then. If the economy is getting back on track, less people are dying, businesses are opening up, vaccines are working, then why is the market going down? Well, guess what, buddy? Greg, Macaroni Bowl, you said the same thing over here. Why is the market going up? The economy's not very good. It's not tied to the economy at all. Okay, so you can't do it both ways and say, well, why is the market going up if the economy's not good during COVID? And then why is the market going down if the economy's good? Right? You're just doing the exact opposite. That's not, where are you? Right? Where are you? These are not generational buy opportunities like the memers say, right? This is just simple rules. Simple rules that on support, we are buyers. On resistance, we sell. Sometimes we're swinging back and forth. You never know how long you're going to be able to hold that trade. That's why we follow rules and transition accordingly, because sometimes you're able to take the trade and you push it for quite some time. Sometimes you take the trade and you have to get out the next day. You never really know, but you have to make that trade there and have a plan for it, which is why when we look at my charts, we have a plan based on a time, and so you're making that trade accordingly for that chance of that happening. That's where your risk to reward comes in. What's the risk to reward ratio of that happening? So let me get long-term contracts or short-term contracts. What do we do today? Well, we want to take advantage of a short-term move while also taking advantage of value in a long-term sense. So we've been in long terms through this move while taking short-term trades to cover some of those downside moves that happen because we're trying to go long, right? Sometimes you're just not going to get value because it's got a consolidated move or the markets are, causing a part of it, to pull back in this sense. This candle here is because of the market. There is an inflow. There is an inflow in value. Value has an inflow while tech has an outflow right now. Let's take a look at the dollar real quick. I'm going to take a look at the profit section. Those of you heading out for the weekend early now, have a great weekend. I'll see you on Monday. Obviously, when you look at this week, don't look at it in terms of P&L for some of you. Look at it in terms of what you learned and what you can use going into next week. A lot of you are going to have a lot of great chances. Some of you that lost money or you made money are going to have a lot of great chances next week. Those of you that are not in a position, you're going to have chances next week to get in position. Those of you that are in position are going to have a chance to take gains next week that you didn't make this week, right? So it's always swinging back and forth depending on how you're trading. Don't be one of those, red, it's good, or red is bad, green is good. Again, there's a lot of lessons to learn, and a lot of you have a lot of lessons to learn still. We all have lessons to learn. The market's our teacher. Go fucking look at a chart for once, right? Now, dollar. We had the dollar start to break here. A bit lagged, certainly a bit lagged in relation to what's happening in the market because, again, had a lot of outflow from tech, and we didn't see it in the dollar until today. And there was an absolute boatload coming from Asia as well. Only now did you see, this is not 1% here. It's pretty close. It's a pretty significant amount now. Now it's a pretty significant amount. I would say, is it equal to the amount that outflowed? Certainly not. Certainly not. And so what's the level of risk here? It's not higher than over here, and the market was doing well. So is the market doing bad? No. Market's being healthy and moving, and here's your favorite thing to look at, volatility. Look at where volatility is in relation to some of these other moves. It's not even close. It's just not even close in terms of the volatility being projected in the market. Are people betting on it? No, everyone's actually shorting volatility still, out of their mind, because that's what the market's been doing for the last, I don't know, how many years it's been now, 13 years. So the market only knows how to short vol. They only know how to short volatility because it's a part of their model to short vol. That's just the market we're in. So where do we buy? We buy when the volatility gets up here because we're going to get the best. We're going to get spreads. We're going to be able to get in there and actually get some points for then our idea. And again, it's not that this needs to always come down. There's times when we need to understand that this is where I talk about tail risk. During all this here, and I'm losing my mind because I'm like, no one's pricing in any tail risk at all. And then events happen, and as soon as it happens, it doesn't take much at all. That's the point. It doesn't take very much volatility at all to have a very significant event happen. We had less volatility this time than over here, and it caused a lot of problems. And it causes extreme selling in the bond market because they don't know how to handle that situation because there's not enough liquidity, and none of the models price in volatility whatsoever. So they're not. It's like a 1 cent spread over there all the time. As soon as that goes up to 2 cents, 3 cents, the spread is just getting out of its mind and it starts to move very quickly, right? It starts to move very quickly. The fucking SPY never has more than a 1 cent spread. It goes to 2 cents, people lose their minds. They just go they go haywire. Algos go insane, VIX spikes. That's when you see this spike, is when it's tracking S&P futures and that goes over 1 cent, goes to 2 cents. That's a double up. That's twice the fucking volatility. That's where you see this, right? So you get that a little bit this week, and then everyone settles down. Everyone settled down today. I imagine a lot of you said you bought on dip opportunities. Listen, if come Monday, right, I'm going to do the mental thing, gymnastics you're doing right now. It could crash, or it could be all-time high next week, right? Those are the extremes, right? did you make a trade that is betting on an extreme to happen, or are you just basically right in the middle and it goes to the downside, you get stopped out? That's part of the plan. And if it goes up here, well, then you feel great. You got a little bit of luck in there, right? You got a little luck that you gapped up and just made 1,000% or something really stupid if that actually happened, because that's extremely unlikely. Just like it's extremely unlikely for this to happen. It's on a trend. We trade on a trend. It's a support is no different. This could be 1%, 1%. It could be any ticker in the world. We just trade off of rules and control it and understand the flows. We had an outflow. Here comes an inflow. That's it, right? And so a lot of times there doesn't really need to be any emotional sort of connections to anything here. There's nothing really crazy going on. There's some really interesting things going on that are different, and that we need to step back and try to understand, get some clarity. There was not much clarity in the move, but it was expected in terms of the yields. It's just you never know exactly how everyone else is going to react, which is why we use levels to basically map out the way people think and they trade, right? Levels are just where buy zones are and sell zones are. And we understand how people are going to facilitate these different ideas. Why did price just bounce back between these levels? It's because that's how they fucking trade. And that's why we map it. That's how we map it. It's been the same. We've had the same trend lines for so goddamn long now, that, we're going to have to give them a birth. We've had to give one of these trend lines a birthday now. I think we've had a couple trendline birthdays. Did this one have its birthday yet? We're almost there. We're going to have a trendline birthday up here, guys. We'll have to have a trendline birthday. These two right here, I think they were born on this one, April 21st. It's coming. 2 months. 2 months. Trendline birth. Do these levels change weekly? Fibs, I know you probably don't speak English based on that question. No, this trend line came from April 21st. April 21st of 2020. No, they actually last forever. And on my charts, every level is at least 100 days worth of data. I go out to like 2.5 years. So levels are just where price converges. No, I'm just kidding, Fibs. I like to fucking troll. No, levels, for those of you wondering, levels, they can change. They do change. But they don't lose their significance, especially if, again, we look for wick touches. What we look for is price converging to those levels. So whether coming into the high or coming into the low, price converges, and that creates a stronger level, right? So this level down here is a little bit stronger than the one up here because you have more price touches in here, just like this level in here had multiple areas from before. And then same with trend lines. The more times price engages with that supply, and again, trend lines and levels they're just buyers and sellers, more buyers and sellers than elsewhere, right? Sometimes, especially with trends, we have a lot of different trends, but it's because a trend is just the velocity, right? It's the velocity of buyers, the way in which everyone is dictating that price should be trading on. This is the same on just about every single market. Every single market has the same angle for a reason. And that's why when price starts to get a little out of it and out of bounds, it's getting a lot sharper, right? And then same when it gets down, it's like, okay, well, we're transposing our supply, we're changing up the curve, but they do remain the same. Let's take a look at profit section. I'm curious to see what we got in here. Doesn't look like many messages came through. Matt with the 55er. Ecto with the -10 because I tried to do too much at open. Okay. Glizzy with the 422. Unfortunate about that $2. Should have thrown the $2 out. Awesome number. Awesome number. Fibs with the -212. Awesome. If you didn't lose a shit ton of money, I would say that's probably pretty good too. And today was your day to put positions on, so no one should be realizing those gains today anyway. So there was a lot of people that said they bought on the dip earlier, and so from what we see here so far, it doesn't look like anyone. I feel like there's a lot of people pushing over the weekend, and again, that's risk. Has a higher probability of getting paid most likely, depending on how you entered. Of course, depending on how you entered. You guys' position is down 1%, but even that position that's probably going to get paid. Let's be honest. That's going to get paid. That's going to get paid. In terms of charts that I wanted to talk about, again, we talked so much about travel, so much about energy, banks. They are I told you so trades. I'm not going to do that. They are trades that those of you that didn't do well overall, it's because you missed the big opportunities that were there from the week before. You missed those big opportunities, and that hurt you. Or you missed the big short opportunities on tech when we were shorting tech, because and I do want to mention this again, those of you that don't know how to short, and it's not a part of your repertoire, what happens is that you're only looking at charts through the lens of trading to the upside. And so what happens is that when downside moves, it removes your ability to trade. And so on every single candle, you're looking to buy to the long side. What that does is it creates a level of anxiety that when the market's going down, it removes every chance that you have. And so it doesn't feel good. If you know how to short, and again, shorting is the exact same, it's just a little bit quicker, a little bit more sensitive, then you don't look at the market in the lens of, well, fuck, man, like, this sucks. I hate this, and I just want to be able to trade long, and I'm a bull. A lot of that is just because you're not comfortable with shorting. You're just not comfortable buying puts. You're just not comfortable with it because you haven't done it enough. You've been buying calls your whole fucking life because that's the thing to do, which it is the thing to do and make money on. But those times when you have to make a little bit of money shorting, and it will protect you, you have to be able to do it, and a lot of you aren't able to pull the trigger when you need to, and it would have saved a lot of the money that you might have lost this week. And you have to remember that's on you. That's on you, and that's a part of learning that now you just had a lesson that you need to go learn how to do that. Whether you need to go do it on with us, put a few $100 in an account and just go dick around with some puts during the day and day trade them back and forth, see how it reacts to different things. Whatever it takes to go make a few hundred trades to go learn that, so that you can then, not even that you have to trade that, but when that opportunity arises, through what we talk about, that there's going to be a rotation from tech to value, that the yields were rising, and we knew tech was shit. And I posted a bunch of charts from the week prior. I shorted Netflix, put big Apple short on the week before, right? If you hear me do that and you only went to the long side, yeah, it fucking hurt and it sucked, right? Those of you that took that Apple trade with me, yeah, I straddled Apple. Went long and short, but as soon as this started, I got rid of the long leg, which is risky, but the whole market indicated to get out of tech. And so that short from here to here, that covers everything for the next few months, guys. It covers all the losses for the next few months. That's the reality. And so then your ability to be objective and to stay disciplined is intact, but not if you're not able to do that. You don't even need to take that trade for it to affect your psyche, because it's just the fact that you could do it. And the fact that you don't need to look at everything as a fucking doom and gloom because you can't go short. I've been talking about these. Look how long this is now. Think about it. This whole year, we've been short tech, basically. Besides the few times that we know there's been opportunities to take advantage of short-term trades to also cover our downside, right? Because tech is a liquidity provider and does well under times of volatility. So when volatility does spike, we do look to that. Like the Amazon trade, that short-term trade I took, this trade does cover some points, absolutely. But do we take these trades to go long? Not right now. We did last year, but not right now. This is in times of just swinging back and forth. Otherwise, we've been short tech. So this weekend, you guys should definitely go read, go look how to take care of business on the sell side. You don't have to do it. You just need to be aware of it so that you're not thinking the market can only be traded one way, because it does affect. I know 100% it affected some of you this week that just by buying one put, it would have probably covered every single loss and you would have made money. You would have really made money. And I know a lot of you don't have the experience doing it, so you just have to trade. And you're not going to be able to read it in a book and you're going to learn it. You just have to do it. The problem is that, again, until you do it a lot, you're not going to be very good at it. You're going to suck. It doesn't matter how much money you have or anything. It's just the amount of times you do it, and you're going to get better at it. That timing, that 10 minutes at open to see prices and know how to price it and everything else. Ability to do some of these things. It's only going to come from doing thousands of fucking trades. How many trades have you guys made? In all honesty, think about that number, and then think about who you're going up against and how many hours they've got and how many trades they've made. You just gotta be realistic and then say, okay, if I'm not better, then I need to find out where I can be. What can I do then? And you start to look, and then some of the answers are, well, I just need to fucking learn more. I just need to make trades. So let me trade with a little bit smaller amount. Let me, in times of uncertainty, and I have no idea, it's way over my head, then you need to know what's over your head. When I asked this beginning of the week, do you know what a fucking bond is? Do you know what yields do? Why are yields going up? I asked on Monday. And you don't know? Well, then that means this week was very hard because you had no idea what the fuck you were doing. You had no idea what was left or right. You're colorblind. You're basically going into the market colorblind. You've got no idea. You're inverted on your charts. Your charts are on a 90-degree angle. You're looking at things. It's very hard if you don't know all the possibilities and you don't know how people. You never worked at an institution. Maybe you don't know why you would sell treasuries. You don't even know what fucking treasuries are for. You have no idea that when yields go up, the cost of capital goes up for an institution. Do you know that? You probably don't. You probably don't understand the borrowing costs go up. And you don't understand what that means for trading, the flows. You understand the flows and that if more money comes in, then your prices appreciate and you can go long and you make money off that. But if you don't have an understanding of these things on just that conceptual level and then are able to then put that over an entire week and not just day to day, where you react day to day. What happened this week? I talked about it. You guys get all doomy and sad, and then you get all happy, and then you get all sad. Maybe you get a little happy today. That is not good. It's fucking shit, and you get fired. You'd get fired. Every single one of you probably would have got fired already if you were trading. And guess what? When you become, if you actually work in an institution, your training does not prepare you to trade. There is no such thing. You just have to go trade. They just put you on the fucking floor and you start trading. You either can do it or you can't. You're going to have to get some trades under your belt to feel comfortable doing it, but you just have to do it, right? And again, like I say, it's a really rough thing to hear, but for some of you, you're just not going to fucking do it. You're not going to be able to do it. And losing money to figure that question out is not a good fucking way to do it. Saying that, oh, everyone blows up their account to learn. That's bullshit. You're trading too much money. Trade less and get the trades. It's the same thing whether you're trading with $100 or $1,000 or $10,000. You got to trade with less to learn. If you think you know more, then trade with more. You think you have the experience, start trading with more. Just trying to start out and do that, again, for a lot of you, the best thing you can do is that if you're fucking going to bed sweating and you're worried about positions and you wake up and you're fucking hoping that things are going to be good today because they sucked yesterday, then that means you have way too much money in the market. And I think this week, some of you finally got that lesson because you were doing well before. Everything seemed fine. Like, oh, I'm in here listening to the dawn talk to things and we're all doing so good here. And then all of a sudden you get fucking your legs chopped off. Someone ripped your fucking heart out. And now you feel like shit. And it's like, well, every time the market's pulled back before, we've done great. And now I did bad. That's because you had some sort of emotional connection to what was going on, right? It's not trading emotionally. It's just being fucking ignorant to things because you're inexperienced, right? You had no idea that fucking yields blowing up would cause you to blow up. You've never even looked at the treasuries before. These kind of things, again, you got to know all the possibilities, and you're not going to know all the possibilities because there's nothing I can do to tell you what everything is fucking possible because not even I know. That's why I try to simplify it. Don't make things more complex. Keep it simple. This weekend, I would certainly, I would do your best to look at as many charts as possible and just to try to understand them. Again, the factor, and this is going to be like the last point before we go into the weekend, the factor of looking at things every single day and knowing what's possible and what could move is it's the big difference, the difference between you and I, besides just the ability to execute trades and not to be sort of connected to them and unsure. And the experience of just making the trade is one thing. And there's going to be like quality of life things there where It's a few percent on every trade, right? But the big thing is that I know what I'm looking at. You guys are searching through your watch list and you're looking at tickers and you're done 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 and you're there all day looking through things, right? You got to know coming into the day what charts are there at your levels, which ones to be watching, and what you need to look for. And the only way to do that is to go look at the chart and see how it relatively moves so that when it does start to move, you can pull the trigger immediately. And that's the other part of, again, that few percent that you're going to get extra. The difference between being able to buy at the very open and then 15 minutes later could be 30, 40% every single time. That on multiple trades is going to add up, and also then adds up to when you need to be managing it, which is like if you bought at the pullback today, it's a lot easier to manage here coming into close, and you don't have to be worrying about those. You have to look at the charts. If you think you can get away with just trading without looking at everything, and you've got one trade, right? Let's say you only trade, I don't fucking know. You only trade DraftKings. You only trade DraftKings, and you're like, well, DraftKings isn't tied to anything else, so I don't need to look at anything else. Who cares? I'll just look at this chart. I'll just trade DraftKings every day. You are significantly wrong, and everyone knows that. And again, I'm just going through the motion here. You have to look at everything because this isn't going to be available every single day. It's also going to get affected by the market. It's going to get affected by volatility. It gets affected by who wants to buy it and when, how many moves it's made. There's other tickers around there that are sort of a part of its sector, might affect its demand at certain times based on its movement. And so you need to just take a look, see where it is, and understand, okay, let me go look at the pen chart. Okay, how's this in the market? And you have to do this with every single chart. You don't need to trade every single one of them, but you need to be aware of them. And the point being is that if you have less experience, then it's even more difficult for you to begin with. And so if you're looking at even less charts and you've spent even less time, it becomes even more difficult to make money, right? And I'm not trying to say like, yeah, I've traded so much more, so you got to look at thousands of fucking charts every night, dude. Like, no, that's a part of my job and why a lot of you here, because I'm going to post the charts. But if you're not even just looking at the charts that I post, I'm not saying you have to, but I'm saying if you want to be successful, like it's something you really want, like if you really want it, then you can't just say like, oh, I'll just wake up. It's the market hours. I'm going to just be here for the market hours and trade. Oh, it's a new day. Day's over. No, the day's not over. The day's not over. During the week, I spend the whole fucking night, every night looking at charts. Last night it took me 6 hours to look at all 1,800 of those charts. And then I started having to put it into my broker and actually get them. It doesn't stop just because the bell rings. It's now time to prep. You got to start looking at things. If you think you can just go and wake up for the market hours and then just start trading it and you'll try to catch things, you're not going to make money. I promise you. I just promise you. It's impossible. That's getting lucky at a whole different level. You guys are hungry and actually want to do this. Those of you that are not, then you need to take advantage of the simplistic nature of some of these things. And that's what I talk about. Then you need to know what kind of side you're on, right? You need to know that, okay, I'm not willing to do that all fucking night. You can still make money, but you're not going to make the returns that I'm going to make for doing the other hours that someone else in here does with the hours, right? If you really want it, then it's like anything. You have to dedicate yourself to it. You got to learn the shit. Spend the time. Otherwise, you can't get mad. You have no excuse other than that you didn't do the work, okay? No one should be complaining in chat and all sad that, oh, I lost money today. It's like, how fucking long did you look at charts, buddy? It's ridiculous, right? So keep these in mind. And again, if you're not able to put in the hours because of other obligations, then you need to know that and tone down what you're doing and keep it very simple. Keep it even more simple. Just, am I on support? Nope. Okay, not trading today. I'll look tomorrow. That's it. Are you still in the Apple put? I am not in the Apple put. I sold it on that first pullback. Those of you wondering, this here, yes, I expected it to keep going down, but as I've said with puts before, let me put it on like the 15-minute here. The thing is here is it's such a timing thing with puts. It's very sensitive to timing. So as soon as this started here, like I'm talking as soon as the market went, I put my order in. Let me show you on the 5-minute to take profit. And again, all of the puts, the average was about 300%. from where I entered. And I mean, again, I had a lot of different contracts for this. It was an average of 300% on every put, not just mine. I'm just talking about the market itself. So you can think about how those margins work. That was selling it over here. Now, if I had held from here to here, I probably would have lost, I don't know, maybe a quarter or maybe half of that value that I gained from over here because they were marches. They were marches. And puts get absolutely annihilated if it's not going one way, which is why I got rid of the calls from over here. So again, I got rid of the long leg because as soon as this starts to go down, they get absolutely fucking pummeled. You guys know. You guys buy something at open, and as soon as the price doesn't go your way, you're already down like 10%. You're like, what the fuck, man? What is going on here if it's a short term, right? So as soon as I held those over the weekend, and as soon as Monday came in, you have to make your decision. It was going one way. That was it. Tech was going one way. Again, this decision here, I didn't try to, I mean, I know I got hyped up right then. I tried to act like nothing happened here, but it can't be understated. The ability to take a trade like that, the difference here is, especially for you fucking whales in chat, is that on all these other trades, you can only put a certain amount in there, right? It's even hard to get over 1,000% on some fucking trades. 10,000 is almost the limit on every single trade. It's so hard to get over that on individual tickers. But as soon as you go into that mega cap space, as soon as you enter that space, you go put $1 million order in and get filled in fucking 5 seconds, right? No one here is putting $1 million order in. Obviously, that's a ridiculous bet, but you could. And so to be able to go put a position here in a significant position in that time, it can't be understated because again, you're not going to get hurt over here. It's a straddle. It just needs to go one way or the other. If it goes flat, well, then that sucks, but you can always get out of it. Someone will pick up the position. And so that was a no-risk trade for a fucking La Casa. A La Casa-sized trade for no risk. And I always talk about it. You got to get those. What's the reward? Well, there's the reward, 300%, baby, for zero risk. There was no risk. You're long and short. You're straddled. As soon as you remove one of those legs, well, you just got fucking risked out of your mind. But we got confirmation, and that was the whole point. Because either this rotation that just happened here with the yields was going to happen, or it wasn't going to happen. And if it didn't happen, this shit was going to fucking go to kingdom come to the top side, right? Instead, we got confirmation of the idea that fuck tech, we're going long value, right? So yeah, you take that profit as soon as you can get it because you don't get to be diamond hands out of your mind on a trade like that. It's ridiculous to think that even if this comes down here, I'll never add it to my understanding or logic that one day since this happened, that next time I short something like this, I won't take that large profit when it's there. That's what some of you learned this week, was that you were up a lot of profit and then you waited and lost all the money that you had gained, right? That's the worst feeling in the world. There's times when you can do it, of course. Yeah, that was a short term. That was just marches. It's short term with marches, so already it needs to make a move one direction, right? It needs to be one way. And then puts, the problem with puts, like I've said before, is that there's a lot less puts anyway, and so you don't have that same demand of buyers behind you. Everyone buys puts at basically the same time. A good example is for calls, right? If we look at something like, we just quickly like give an example, like something like over here with Z or something. It's not the greatest example, but okay, right over here. So let's just act like this is any chart right here. This is any chart, just some chart. When people are buying calls here, they're also buying calls up here, right? They're still buying calls over here. So you're still actually gaining demand in value, right? You're actually getting points that whole way. The problem with shorting and buying puts is that it's a much higher level of trader that's doing that, and they're not buying puts over here. You buy puts right here as soon as that move starts, and if it doesn't continue, then you're out of it. If this was going down, right, this was inversed. I know there's a way to inverse it, but just to show you. You're buying puts here. You're not buying puts over here anymore. This was a one-way trade. You buy puts, it needs to continue. It does continue, but no one else is giving you a fucking chance over here. No one's picking them up over here. Not until the next move, and it basically creates a new level of momentum. Which, for Apple, when you look at this, why are people still picking up puts here? Because we just opened a new day and we're selling like crazy. And guess where the buyers are? You have the opportunity to push this a little bit further because the buyers are down here. And so this shows up on all of those levels, right? All of those charts. It knows that, okay, we have buyers down here. And so during here, it cuts off. It cuts off very quickly that the puts are stopping. Why? Because everyone's buying fucking calls. Everyone's buying long in here. Everyone's buying long in here, and that's why it turned. It tightened. As soon as it starts to tighten, you have to already be out of the trade. For puts, if it starts to tighten, it's too late. It's too late. If it starts to tighten, it's too late. And now you're going to have to wait for the next leg, which was not until basically over here, right? And it didn't feel very good to hold through any of that, that's for sure. This here, again, half your value is gone. Half your value is gone because now you don't know how long it's going to take for you to get back down to that level. It's the loss of time which hurts you the most, not volatility or the underlying value. It's the loss of time that really hurts you there. But again, you just got to know when it's possible. What was that end of day sell for? And so, yeah, so that's what, when you and I were just talking earlier, Brian, that's what I mean by from earlier was that no one wants to be in tech. Everyone has made these moves to be long value. What did they do from open here today? They're just taking advantage of some liquidity here. They're taking advantage of some liquidity. Look at, we finished right where the low was of the start of the day. No, there was no inflow in tech. No one wants to be in tech. It's really easy though to look and say, oh look, it's up almost 3% intraday from the low. Like it's break even, but look, from the low it's up. It's up. No one actually wants to be in here though. We've already established that. No one wants to be in tech. Who are the sellers over here? The fucking people that bought over here. It's the same fucking people. It's the same people. All they did was they have cash to fill and they need to go somewhere liquid. So they come over to the mega caps. What happens when volatility rises? Tech becomes possible. There's an ability to get here because it will move with volatility because of the way the correlations are. So people that picked up here, they're the same ones that sold here. Why? Because they're the same people that are selling treasuries and going long value. You don't want to be in this going into next week. You want to be somewhere else. Somebody go find me a chart that looks like the opposite of this. I bet you can find them because there's a lot of fucking names up here that you guys should have been a part of still, right? Any travel charts? All the travel charts? Oh, but Don, it's not like on the same time frame, so it doesn't count. Okay, I mean, whatever you want to believe. You can believe all you want that they're not connected, but 100% everyone's going long. Like, look at CCL up 5% today. Like, these kind of things, it's like, well, people want to push this over into next week because value is there, right? People want to push this up. They don't want to be in tech. They sold tech for a reason, right? They're selling it for a reason. Facebook, why does Facebook do what it did? I have no idea, but people are just utilizing the liquidity in there, and there must be some fucking retail in there that pushed. Think about this, right? This is market makers, and it's trying to deal with the supply in here. The issue in here is that as price moves through the supply, market makers are now buying those fucking calls, like to delta hedge those calls, and so they're buying. And then as soon as it stops, well, now the gamma has stopped, right? So here, acceleration. It's being bought on the underlying by market makers for the calls even just today. As soon as that acceleration stops, look at this price movement. This price movement is the same players. It's the same players, which are market makers, institutions. And so based on the acceleration, they're digesting whether or not they need to be hedged against these calls. So think about it. How many calls are in here? There's probably $1 billion worth of value of calls around these two levels, that if it's on one side or the other, they need to be hedged against it. Over here, what's the decision being made here? Is that, oh, we don't need to be hedged against those calls that expire today. So sell the underlying. We don't need to be fucking exposed. sell it. Again, it's all options. All this is options, and you can see it. These here, these opening candles, all this opening shit, it's just institutions. It's just institutions. They're reacting to whether or not they need to be exposed, right? And it's all based off the gamma. Because as soon as their acceleration, all it does is turn into that fucking obvious institution move. It's the most obvious thing in the world. And I know you guys have started to see it now where it's like, okay, I know who the fuck that is because that's not how people trade. No one trades like that. All that is scheduled fucking positions for exposure. And as soon as something changes, well, holy moly, it's time to go the other way now. And again, this is all dictated by the options, how much buying, how much selling, what the positions actually are. If all those positions are open, then decisions are being made today. This movement, again, is just the market, the money makers, market makers deciding whether or not they need to be hedged the delta of those fucking calls or not. As soon as the answer is no, okay, get us out of it. I wonder what the after hours looks like. Can we see it? Doesn't really show us. The point being is that there shouldn't be movement because there's no options trading. They carry over to Saturday, but none of these have to be exposed to now. And no one wants to be in tech anyway. So any institution, any funds that, I mean, no funds bought this, but if they had positions still, they're taking advantage of they have points they can sell now that are a little bit higher than before. But again, no one wants to be in tech. Everyone wants to be value. I mean, I would really hate myself if I'm a trader right now and I'm on the wrong, again, you should never be on the wrong side of a trade. You don't want to be on the wrong side of a macro fucking trade either. If you're on the wrong side of the market right now, you're really fucking up because what are you looking at? You just fucking woke up from underneath a fucking rock. You have no clue what's going on. Like you take 2 minutes to find out what people are doing in this market. It takes no time at all. And all you have to do is look past what's right in front of you. All you need to do is think about where price is going to be next week. Every single week. Every single week, you ask where price is going to be next week. That's it. You can get away with it. You can have a fucking toddler and decide, right? Am I going to be hungry later? Probably. So I'm going to eat, probably, right? Okay. That's about as simple as it is to understand, okay, if people sell treasuries and they think inflation's happening, where are they going to put that money? Oh, so you're betting on the economy coming back. Oh, okay. I guess I'll go buy the things that do poorly during that. Okay. That makes a lot of sense. No, like it's very obvious, right? All right, I'm out of here. Yep, everyone enjoy your weekend. Again, come back next week with a clear mind. Let's get after it. And I'll see you Monday. Watch out for charts. Maybe have some cool stuff for you guys over the weekend as well. Yes, Ecto, get that bag. I'll get some bags, that's for sure. I'll see you boys. Have a good one.